Guys, welcome to my YouTube channel. My name is Anu Joshi and I'm a realtor based in Toronto. So I work in the GTA, and today I wanted to take some time to discuss the brand new federal budget that just came out, hashtag Your Budget 2019, and how it pertains to the housing market in Canada. So there's basically three main things that the budget will be introducing in terms of the housing market. The first is a few measures that they're taking to assist first-time homebuyers in terms of their affordability and being able to purchase a home in Canada. The second thing is in regards to the supply of housing available in Canada. And the third refers to the enforcement and regulation of the finances pertaining to real estate purchasing and mortgage. So first, we know that first-time homebuyers are having a harder time than ever getting approved in today's Canadian real estate market and are finding that affordability is a huge issue. The new budget is planning to introduce a program called the CMHC Shared Equity Mortgage. Basically, what the CMHC Shared Equity Mortgage means is that first-time homebuyers with a minimum down payment of 5% may qualify to have the CMHC help them with an additional portion of the down payment. A first-time homebuyer can apply to the CMHC when they're planning to make a purchase with 5% down to have CMHC also front between 5 and 10% of the down payment. So for the purpose of our example, we'll just say that the CMHC is putting in 5%. So let's take a house that's worth $400,000. And the first-time homebuyer puts in a 5% down payment, which is about $20,000. Then CMHC also puts in $20,000. So the total down payment under this new program would be $40,000, making the loan amount $360,000. The same buyer that only has the 5% down payment, if they were to get approved on their own and get a mortgage with just a 5% down payment, the mortgage loan would obviously be higher. It would be at $380,000 because they paid the 5% down, which is $20,000. So the benefit of this new equity shared program for the first-time home buyer is that they get an additional increase in their down payment funds, which in effect decreases their loan amount, and a lower loan amount obviously means that you have a lower monthly payment. With the new program, there is no parameters as to if the first-time homebuyer has to pay back anything to CMHC on a monthly basis or anything like that. So far they haven't announced anything, but the speculation is that once CMHC gives you the money for the down payment, it's yours. It stays in the mortgage as a shared equity, and it stays there until the first-time homebuyer decides to sell that house. Now, again, the program details haven't been released, but so far what we understand is that because it's a shared equity program, what happens when they sell the home is that the first-time homebuyer has to pay back to CMHC the proportionate share of what they put in. So if CMHC gave you 5%, which was initially $20,000, and your property has increased in value to, let's say, $600,000 whenever it is that you plan to sell, 20% of $600,000 is $30,000. So essentially you would be, upon sale, you would give back to CMHC the $30,000 amount, which is the percent that they lent you when you first borrowed to get the mortgage. So that is kind of the understanding of the shared equity program. The details have not been released yet. It is something that the CMHC is going to be working on for the next several weeks and months. What I've heard so far is that by fall of this year, they plan to institute this program, and the speculation is that over the next 3 years, about 100,000 first-time homebuyers plan to use this program. So hopefully it will increase the affordability and the number of first-time homebuyers that are actually able to get homes and get mortgages approved. The second thing, as it pertains again to first-time homebuyers, is an improvement to an already existing program. So there was a provision in Canada that a first-time homebuyer, for their down payment funds, can borrow basically from themselves from their RRSP. So essentially, a first-time homebuyer in Canada could borrow up to $25,000 per person from their RRSP to pay for their down payment of their first home. The program has been improved, and now that amount has been raised to $35,000 per person. So if we're looking at a couple, a husband and wife, or two people that are co-purchasing a home, that is now up to $70,000 that they can borrow out of their RRSPs, which substantiates a pretty large portion of the down payment, or sometimes the whole down payment, depending on the type and price of property. So those are the two main, the new program of the Shared Equity Mortgage with CMHC and the improvement to the RRSP borrowing for first-time home buyers. Those are the two programs that have been introduced for first-time home buyers. Now, there's two other things that the budget also touched on for housing in regards to the housing supply. So they are releasing a sort of a housing supply challenge. Now, we don't exactly know what this means yet, but they are saying that they're going to be investing about $300 million over the next several years in initiating new builds, new development, and increasing the overall supply available in Canada, and hopefully in the more saturated markets like Toronto and Vancouver. Increasing housing supply and encouraging builders and private landowners to get involved with higher density housing, infill housing, things like that. And the fourth thing that they're also saying is in regards to the regulation and enforcement in the mortgage industry. Now, in recent years, it's been brought to the attention of the media and the Canadian public that Canada is subject to fraudulent practices in the mortgage sector. So in an effort to avoid this, or to deter more fraud or borderline fraudulent practices taking place, they will be increasing enforcement and regulations of the mortgage industry for real estate financing, so that there is no money laundering, no other criminal activities that happen, because obviously we are aiming for a secure real estate market, but more so a secure economy in Canada moving forward. So those are the new sort of programs that they have released in Your Budget 2019. Over the next several weeks and months, we'll see how they actually play out, how they actually affect you. If you're a first-time home buyer, or if you're an investor, or if you have multiple properties, whatever your case scenario, and you want to know how any or all of these initiatives may apply to your real estate business or your real estate portfolio, please let me know. Drop a comment below. Also, I'm available on social media, Instagram, Facebook, Twitter, at Joshi Realty. I'll put all my links below. And if you thought any part of this was helpful, please share it with your friends and family. And if you have any questions, let me know. Please subscribe, like, and I will see you guys on the next video.